Hello and good morning. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Monday. Here, I cover the major economic events of the week ahead, show you some of the leading momentum stocks in the market, and prepare you for a week of profitable trading. Today, we'll be taking a look at the broad stock market indexes to summarize the action over the last few weeks. Then we'll take a look at the economic calendar to address any market-moving data coming our way. And finally, I'll share 3 compelling technical trade setups in stocks with top Zacks ranks. So first things first, let's take a look at the broad market and what's been happening. Last week, we noted that the S&P had begun trading below this kind of important level of support, and people had become pretty bearish on the market overall, uh, specifically after Jerome Powell and the Federal Reserve did their regular meeting. And he basically exclaimed that rates, the market can expect rates to stay higher for longer. And that means that financial conditions are going to get tighter, and it would generally not be good for the stock market. So you can see right here was when he had the meeting, or right here rather, and we sold off all that way through. I did note that I was actually quite bullish last week. I came into last week rather bullish, and I noted this setup in the NASDAQ. I noted the NASDAQ traded right at the bottom of this range, and I liked the way it was holding. And we can see that NASDAQ stayed above this level of support, and on Friday we got that big, strong move higher. Most of last week was quite choppy. We had a few inside days as the market sort of digested this possible new regime, higher for longer. What it could expect moving forward. But on Friday, there was a big move higher, and I want to explain what happened and why it was a little bit strange. So what happened, the stock market moved a lot higher on Friday after we got a jobs report that showed that the economy had added a lot of jobs. Based on the narrative that was playing out, you would have expected the market to sell off on that information because strong economy would mean the Fed is going to continue to keep rates tight, and you would have expected the market to sell off. The market surprised everyone, and good economic news was good economic news, and the market rallied pretty aggressively. If we can see, NASDAQ filled this gap. Now, there's a few things that could cause that. Could be a shift in the narrative. Could be that the market was oversold and just needed a technical bounce anyway. But the market rallied nonetheless, and I generally don't fight the price action, and it's telling me that the market is going to go higher. So for now, we maintain our bullish stance. I think the economy is still strong. Markets are looking good. I think that this sell-off, people were very nervous about what was happening in the interest rate market. The 10-year rate got very close to 5%, and that is concerning. But over the next few weeks, I think things still look bullish. I think, the next test is the high of this range in the NASDAQ. For the S&P 500, I think we probably get back into this range and maybe find some area here and take it day by day. But for now, I maintain a bullish stance.
Sure.
Obviously, this weekend, there were some terrible events that happened in Israel, and it is moving markets quite a bit. Not crazy amounts, but the stock indexes are gapping down slightly. Look like they're going to gap down slightly today, and the price of oil gapped up. It's up 3.5% right now. But that happened after a big fall last week. So that's where we are now. So I maintain the bullish stance. I think markets are going to go higher. And I'm going to share with you a couple of strong stocks. So there's one thing that I do want to note. There's one indicator that I like to follow, an economic indicator called the National Financial Conditions Index. It basically aggregates over 100 different important economic indicators, which include traditional economic indicators like employment and growth, as well as credit spreads and a number of others. I recommend just going to the Chicago Fed website and checking it out if you want more information. But I like to keep my eye on it because it tends to be pretty helpful for finding turns in the market. So if this is trending down, it means financial conditions are loosening. So we can see right here, at the beginning of February, financial conditions began to tighten. And it actually lines up quite well with turns in the market, which makes logical sense because as financial conditions tighten, the stock market you would expect to not do as well and liquidity to become less plentiful. And then again, when it turned here in late March, this basically marked the Silicon Valley bank failure, and the markets rallied pretty consistently from there. And we can see that from there, financial conditions loosened considerably. But these numbers are also revised regularly, so it can change week to week. But here I'm seeing bottom forming. You see the NFCI says negative 30.38, negative 0.38, and we got negative 0.37 last week, which means there has been a slight tightening in financial conditions, and the trend looks like it may begin moving higher. We can see there was sort of a false trend change here. It went flat and went flat and went flat, and then it began trending lower again. It did find a low, and it began trending higher again, but it rolled over again. So this is something I'll keep my eye on. If we see financial conditions continue to tighten week after week, I'm going to become a little bit more wary. But like I said, I think we at least see markets, the NASDAQ, trade to the top of this range. But it's just something to keep an eye on. And for now, I think it still shows pretty ample liquidity, strong financial conditions. So I think it's a good reason to stay bullish. But we're close to a point where it may begin to show tightening, and we may see that come through in markets be a little bit tighter. So now I'm just going to cover the economic calendar this week really briefly. Beginning of the week is kind of quiet. There's a couple of Fed speeches in the beginning on Monday. Tuesday, optimism index and wholesale inventories. And then really Wednesday and Thursday is the big action. We have producer price index, which is a measure of inflation from the business side. It's going to be, inflation is just critical in the conversation right now. And there's going to be the Fed minutes, which come out on that day on Wednesday as well. And then Thursday, it's like a huge day. Initial jobless claims and core CPI are the most important numbers moving forward. Initial jobless claims is a very useful way to gauge where employment is, because we get it weekly, so it's not lagged as lagged as like the employment number we got on Friday, which is just a monthly number. So again, like I said with last week, we want to see, it would be bullish for markets if we begin to see initial jobless claims pick up, as ironic as that is, because it would mean that we can begin to expect to see the Fed sort of take their foot off the pedal on raising rates or keeping rates higher. So ideally, we want to see this number inch up a little bit. Above 212,000 would actually be good for the market. We don't want to see it too high, but a little bit higher would show that the labor market's cooling off a little bit. And same thing in CPI. We definitely want to see this number going lower. So core CPI is expected to be 4.1%. The year-over-year CPI 3.6%, and this is the month-over-month number for CPI and core CPI. So really important. Thursday is the big number, so just be prepared for that. Now let's go over the stocks. So here we have VMware. It's a well-known software company. It lets you port in to virtual desktops. It is a Zacks rank 1 stock. It has upward trending earnings revisions. You can see, again, snap higher about a month ago, 2 months ago. You can see current quarter earnings have been revised higher by 6.7%. Full year 23 earnings have been revised higher by 5.8%. 9%, and next year's earnings have been revised higher by 5.3%. VMware, it's got steady sales projections as well. Current quarter sales are expected to grow 7% year over year. It's not a high growth business, but steady. Earnings are expected to grow nicely year over year as well. 19% year over year in the current quarter, almost 11% for the full year 23. At next year, about 10% earnings growth. Nice steady numbers. But here we like to look at the charts, and VMware has a very compelling technical bull flag that is definitely worth keeping an eye on. I would put an alert above 168.50, and if the stock can break out above there, that would definitely signal a technical bullish breakout, and I would not be surprised at all if the market plays ball and decides to move higher, that this one really breaks out and moves nicely. Alternatively, could move sideways, and if you do see it below 164.50, I would avoid. But that's why I like the breakout trades. You're not going to be in until it moves above your trade signal. So until it's above 168.50, it's not a buy. But if it does, it's good to go. So next stock we're going to take a look at is Palo Alto Networks. They're a cybersecurity firm, fast-growing company. Earnings are expected to grow 28% over the next 3 to 5 years. That's annual. It's got a Zacks rank 1, strong buy, and it's had some nice earnings revisions. We can see earnings have been trending higher. Estimates have been trending higher all year. In the last 2 months, excuse me, current quarter earnings have been revised higher by 5.5%. Fiscal year 23 earnings have been revised higher by 7.7%, and next year's earnings have been revised higher by 6%. Like I said, it's a really fast-growing company, and sales are forecast to grow steadily in the high teens over the next 2 years. Earnings as well, expected to grow really nicely, like we said, in the 20s. And it's got a great-looking stock as well. So the market actually just opened as we're doing this video, and Palo Alto Networks is breaking above this $250.60 level. This isn't the prettiest chart setup, but it's definitely bullish. This has been one of the strongest stocks in the market, so have my eye on it. So it's signaling a breakout right now. This is sort of the bottom of the bull flag that I'm looking at, and if you want to see a close above this level to really confirm the breakout, but again, as long as the market stays strong, the leading stocks are going to continue to lead, and I think that's the case with Palo Alto Networks. You don't want to see it reverse back down here, and again, you might want to keep your eye on it if it does reverse by the end of the day. And again, if it trades below 225.40, kind of a big range you got to trade against in Palo Alto Networks, but when this stock gets moving, it really rallies aggressively. So it's worth keeping an eye on. And the last stock for today is Uber Technologies. And it's the app on our phones where you can call a car and it'll come pick you up. It's a Zacks rank 1 stock. It's got an interesting business model. I think it's really important for them to get autonomous vehicles start working, for the business model to really work. But it doesn't mean we can't trade it. It's got upward trending earnings revisions, pretty good sales growth expectations in the high teens again. 17% year-over-year growth this year is expected, and 18% next year. Earnings are expected to jump way higher. They are going to be showing net profitability now, which is pretty exciting. Last year, they lost 61 cents per share. This year, they're going to be expecting 13 cents on the quarter, 42 cents on the year. Current quarter and next quarter haven't really been touched, but analysts have raised estimates for full year for 2023 by 13.5%, and next year they raised by almost 3%. Uber as well has been a strong stock all year. It's got a nice setup here. I actually really like this setup. This kind of descending wedge, descending flag, and we got this clear level of support at $43.90. So, and we got breakout level here of, let's call it 45.75 that we want to see Uber breakout above to signal a breakout. But this one, if you see a breakout above the level, definitely would expect new year-to-date highs. But it's got to hold this level here. So if it does trade below this 43.90, 44 area, you may want to wait and look for other opportunities. Thank you all for checking out the video. I hope you found it informative. If you like this content, please like and subscribe to the channel. And if you want more from Zacks, you should go ahead and sign up for our current promo with the link in the description.